Hey everyone, and welcome back to another Bitcoin and cryptocurrency video. In today's video we will be discussing macro data, but more specifically the most up-to-date inflation report that came in this week. If you like this type of content, make sure you hit that like button, make sure you hit that subscribe button, as it always means a lot to me. And if you are a fan of cryptocurrency, I have a cryptocurrency shop where you can shop cryptocurrency products. I'll leave a link in the description down below so you can get a nice 25% discount off your next purchase. So without a further ado, let's begin. And just this week we had an inflation print of 3.4%, which was lower than the previous month, as the previous month was 3.5%. It has dropped 0.1%. Now I believe with this print that the economy or the Fed has put the narrative of rate hikes to bed, and I'll go into more detail as to why so. But I tweeted this out. If you don't follow me on Twitter, make sure you go follow me. I'm at J1General_. And I tweeted, Bitcoin continues to climb higher as the Fed continues to climb the wall of worry. By climbing the wall of worry, I essentially mean that with the Fed pausing rates for such a long time, the markets will keep climbing until something within the economy breaks, or when the Fed essentially pivots to quantitative easing. But the reason why they pivot isn't to turn the money printer on, it is because something has broken within the economy. I think that's why a lot of people get confused as to why quantitative easing or rate cuts is bullish, but it's not bullish in the short term, because it means that something has broken within the economy. So the economy has to resort to quantitative easing just to ease the pressure off of the government. So I tweeted, the market halted because of rate hike fears, as in Bitcoin USD dropped for a few weeks in a row from its all-time high of around 74k. Bitcoin dropped for a couple of weeks because the markets believed that rate hikes will essentially return. You know, we've been at these interest rates levels. If I go to the interest rates, we've been at 5.5 for such a long time. And I was of the opinion that the Fed isn't going to rate hikes. Hike the rates. If we go to the CME Fed Watch tool, which shows the probability of the next rate cut or rate hike or so, I remember this chart, and market makers were essentially believing that the first rate cut won't happen until November, December this year. Now with this recent inflation print, the next rate cut is predicted to come in mid-September. I'm of the opinion that a rate cut will 100% occur either in June or in July. And the reason for so is because of a mixture between the interest rates remaining at 5.5% for an above average time. The average time that the Fed pauses rates for such a significant time is 8 months. We're currently in our 10th month, so we're 2 months above average. So soon we will look to, but the Fed will look to cut rates soon. And the reason why is a combination of the unemployment rate and the inflation rate. So I carry on to say, now that rate hikes have been put to bed with a high unemployment rate print and dropping inflation rate, the market will continue to rally until rate cuts finally arrive. So what I mean by that is, because if we take a look at the unemployment rate, it has slowly transcended into an uptrend. It has built a base and it's now starting to curve up. And we know that in prior history and in my prior videos, we looked at whenever the unemployment rate starts to put in a little base or a bottom, as you will, once it gets going into a small uptrend, it then explodes. Yeah, and the reason why it explodes is because the Fed has held on to high interest rates for such a long time. The economy has caught up to the sufficient rate hikes. Businesses can't take it no more, so then they lay off staff. So as we had a 3.9% unemployment rate print, that is significant, because that is essentially the highest it's been since the end of 2021. Now we did get a 3.9% back in January, but since then the unemployment rate did come back down, but now it's starting to tick back up. Furthermore, the inflation print came back down. So when you have inflation going down and the unemployment rate going up, that gives a reason to the Fed to essentially cut rates soon. Because if we carry on at 5.5% interest rates, the reason why interest rates go up in the first place is to put a halt on inflation. So if interest rates are high for longer, the inflation is more than likely going to go down, as well as the unemployment rate going to go up. I mean, it's just basic economics, yeah? So I just wanted to discuss the inflation rate, because even though the inflation rate has been sticky, which has caused rate hike fears, I now believe that the inflation rate will start to come back down because the market is starting to feel the effect of the sufficient rate hikes from the Fed. You can see. Now, just going into what that means for Bitcoin, I also said whether it's a new high or a lower high, Bitcoin will top out in 2 to 6 weeks before the first rate cut. And I believe the first rate cut will come July at the latest. If a rate cut comes in June, we should expect a lower high. If a rate cut comes in July, Bitcoin has enough time to make new highs. And why do I say this? Well, if we actually overlay the interest rate chart with Bitcoin USD and we set a new price scale, you can see from last cycle, which is our most relevant data point, because this has only happened once. We've only experienced one other rate hiking cycle with Bitcoin. Bitcoin essentially topped out 1 month before the first rate hike, which was here. If you can remember, in July of 2019, that is when the Fed cut rates for the first time, and Bitcoin topped out in June, so 1 month before. So my thesis is that if we get a rate cut in June, then the market would have already topped and Bitcoin will be forming a lower high. However, if a rate cut comes at the end of July, then Bitcoin has enough time to make a new all-time high before it starts its descent from the rate cuts. As mentioned previously, rate cuts aren't bullish for the market. A rate cut suggests that the consumer, i.e. us, is losing confidence in spending our money, and if we aren't spending our money, markets are just gonna fall. That's just the way it is. So that is pretty much it for today's video. I did a more in-depth FOMC video just last week where I go into more depth of the macro data, but I just wanted to provide an update or a video today discussing the inflation rate and the implications of that and what it means for the markets going forward. As I said before, I do believe a rate cut will 100% happen by this Fed meeting on the 31st of July. So until then, Bitcoin's going to remain choppy. It could go to a new all-time high. It might make a lower high, but I think, well, it's quite obvious that the bulk of this move is already done. Yeah, we're now entering a phase where, okay, I'm going to explain the Bitcoin dominance as well. I didn't want to talk about the Bitcoin dominance because I wanted to make a separate video, but as we are here, let's just take a look at the Bitcoin dominance, because whenever we go through a rate hiking cycle, the higher risk assets bleed into the lower risk assets because there is some sort of uncertainty, and as the liquidity is leaving the markets, liquidity would rather leave the high risk assets and go into the safer option. In crypto terms, that means that altcoins will essentially bleed into Bitcoin, hence why in the last cycle, the last rate hiking cycle, the Bitcoin dominance shot up when the markets started to feel the sufficient rate hikes. Just like now in this cycle, the Bitcoin dominance has started to shoot up as the market starts to feel the sufficient rate hikes. So I believe the Bitcoin dominance will also top out when the first rate cut occurs. That could be in June or in July. The Bitcoin dominance will top out, but we also know that once the Bitcoin dominance tops out, that doesn't mean that alt season is arriving, because we know that Bitcoin tops out a month before the first rate cut and then goes into a descent. So that just means that altcoins will get bled dry into Bitcoin until the first rate cut, And then when Bitcoin starts its descent, that's when altcoins get wrecked. And that is when I'll be looking to pick up altcoins for the next alt season, which I believe will occur in 2025. So that is it from me today, guys. I hope you all enjoyed the video. If you did, smash that thumbs up, smash that like button. And as always, it's been your boy, J1 General. Thank you and goodbye.